Welcome everyone. Thank you so much for joining me. If you haven't already, please consider subscribing and make sure that you ring the bell to turn on video notifications. If you ever woken up, checked your bank account and noticed money missing, your heart probably dropped. And if that missing money turned out to be because of a withdrawal made by the Internal Revenue Service, the IRS, you're not alone. Many Americans each year are surprised to learn that the IRS can, in fact, take money directly from your bank account. But here's the key. It does not happen out of nowhere. There is a specific legal process that the IRS must follow first. So today, let's break down exactly how the IRS can take money from your bank account, what warning signs to watch out for, and most importantly, what you can do to stop it from happening or undo it if it already has happened. When you owe back taxes, the IRS does not immediately jump to seizing your money. The process begins with something very simple, a bill. That first notice explains how much you owe, why you owe it, and what your options are, whether they're paying in full, setting up a payment plan, or disputing the debt. If you don't respond, the IRS sends more notices. These are formal reminders, and ignoring them is a mistake that many people make. Once the IRS sees no progress, it may assign a revenue officer to your case. That's when things get more serious. The officer can call you, they can visit your home or your business, and even file a federal tax lien. A lien is a legal claim against your property that ensures the IRS gets paid if you sell your home, your car, or your other assets. A lien is bad news, but it's not the same as losing money. The next step is what you really need to watch out for, the Notice of Intent to Levy, officially known as CP504 or CP405. This document warns you that the IRS plans to seize your property, including funds in your bank account, of course, if the debt is not resolved. Then comes the final notice of intent to levy, often called Letter 1058. This is the last warning, the very last warning that you will receive from the IRS. Once that letter is sent, you have 30 days to either pay your taxes, arrange a payment plan, or request a hearing. After that window closes, the IRS has the legal authority to move forward with a levy, meaning that they can take your money. Here's how it works. The IRS sends a notice to your bank freezing the amount that you owe. Your bank must hold that money for 21 days before transferring it to the IRS. That holding period is your final opportunity to act, to call, to set up an agreement with the IRS, or to request a hearing. If you do nothing, the bank actually releases the funds to the government once that waiting period is over and the money is gone. The IRS can also go after your paycheck, by the way, through wage garnishment. That's when your employer is required by law to withhold a portion of your earnings and send it directly to the IRS until your debt is paid off. If you are self-employed or if you pay yourself through an LLC or a corporation, it's even trickier because you're both the employer and the employee. The IRS expects you to garnish your own wages, which does feel quite awkward, of course, but it is legally required once the notice goes out. Ignoring it can lead to steeper penalties and more aggressive collection actions. So how can you stop the IRS from taking money from your bank account or your paycheck? The simplest way is to pay your balance in full, but let's be real, that's not always possible. The next best option is to set up an installment agreement with the IRS. This is effectively a payment plan that allows you to pay off your debt over time, and once it's approved, the IRS will stop any levy or garnishment activity. You can also request a collection due process hearing, often called a CDP hearing. You have 30 days from receiving the final notice of intent to levy to file for one using Form 12153. During this hearing, you can challenge the levy, you can present your financial situation, or you may propose a payment plan. It's your best chance to stop the levy before it actually happens. If you're overwhelmed or if you're unsure what to do, this is when a tax advisor or a tax resolution professional can make a big difference. They know how to communicate with the IRS, they know how to navigate the paperwork, and they know how to negotiate on your behalf. But what if it's already too late? What if the IRS has already taken the money and you never got a warning? It may happen. Well, the first thing to do is stay calm and verify what happened. Sometimes people miss the required notices because they moved, because they changed addresses, or ignored letters from the IRS that may look like junk mail. Double check whether any notices actually were sent. If you truly never received the proper warnings, call the IRS immediately, explain your situation, provide proof of your current address, and request a reversal of the levy. If the IRS determines that you did not receive the legally required notices, they may agree to return the funds. If that doesn't work, you can escalate your case through the Collection Appeals Program known as CAP. This program allows you to formally challenge the levy decision, and to start the process, you will need to file Form 9423, and it must be postmarked within 3 business days of your discussion with the IRS collections manager. That is a very tight deadline, so don't wait. Again, a tax professional can help you here. They can represent you during the appeals process, and they can also make sure that the IRS follows its own rules. The key takeaway is this: the IRS can't just take your money without notice. There is a clear process in place, and there are multiple opportunities to resolve the issue before it reaches that point. The biggest mistake that you can make is ignoring the letters, is ignoring the IRS notices. Those envelopes marked IRS might be very, very uncomfortable to open, but they're your warning and your chance to stop a levy before it happens. If you're already in trouble with the IRS, remember that you do have rights. You have the right to request a hearing, the right to appeal, and the right to representation. The worst thing that you can do is just remain silent. So if you get the first notice in the mail, don't panic, but don't ignore it either. Reach out for help. Take action early, and you can protect your bank account, your paycheck, and your peace of mind too. Because when it comes to the IRS, it's not about luck, it's about knowing the process, it's about staying proactive and also responding before the situation spirals out of control. Stay tuned for new updates. I upload videos on a weekly basis. Remember to subscribe, enable notifications by ringing the bell, and I will see you back here soon. I hope you have an amazing day. Take care.